Well, the worst performing sector of the stock market since the election is also the newest sector, real estate investment trusts. And as you know, sometimes cheap means a bargain. Sometimes cheap is cheap for a reason. Erin Gibbs is portfolio manager with S&P Global. Craig Johnson is a technician with Piper Jaffray. All right, Erin, you guys track earnings. How about this? We've seen the real estate investment trust sector come down. Do the earnings prospects for this group make it inexpensive with upside or cheap for a reason?
They're cheap for a reason, and they're sort of in the bottom third of the valuation range. They're not super cheap right now. What's really all about the REITs is that they're used as proxies for yield. And we've seen the pricing go down just as we've seen interest rates go up. So as soon as that 10-year, it's been on an upswing since the second half of this year, and then you see the exact same direction of the REITs. They have dividend yields that are about 1.5 times that of the S&P 500, about 3.7% dividend yields. And so that's what people are really using them for, on top of the fact that their earnings don't look so great this year. So there may be some appreciation next year, but as long as we're seeing interest rate rises, it's going to be tough for the valuations to expand.
Okay, Craig Johnson, chart this for us. Do you think it's cheap for a reason or a bargain?
Well, Brian, there's no question this is the classic bond proxy substitute. And when you look at the 5-year chart I brought in, you see a pretty clear channel that's been playing out for the last 4 or 5 years here. Stock has, this ETF is backed up toward the lower end of that channel. 175 is a really important level. Maybe we get a little bit of a bounce, but I suspect that that's going to break and you're going to see this trade down toward the 160s from my perspective.
All right, Craig Johnson and Erin Gibbs, we are going to leave it there, looking at a very poor performing sector as rates have risen. Guys, thank you both very much. And as a reminder, for more Trading Nation, you can go to the internet, tradingnation.cnbc.com.
Sometimes when the market is trending down, the best thing a trader can do is wait it out. When a stock is trending down, it's telling you it wants to go lower, as sellers are willing to accept less and buyers are not willing to pay up. A more experienced trader will wait for the stock to trend higher, even if it means buying at a price above where it's currently trading.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.